All right, let's get into it. Today we're going to break down how one VC firm is pretty much tearing up the old playbook for early-stage investing. And look, they're not just slapping AI on their website as a buzzword. No, they've built their entire strategy around it. And it's all powered by this massive, one-of-a-kind data set they've been building for years.
And honestly, that's the whole game right there, isn't it? This quote from OpenAI, it just nails it. It's not about having the flashiest AI model anymore, because those are getting easier for everyone to access. The real, lasting advantage, that moat they're talking about, it comes from the unique data you can feed those models, the stuff nobody else has.
And just to really drive that point home, you've got BlackRock saying the exact same thing. If you don't own your data, you're replaceable. Simple as that. It's like the ultimate stress test for whether a company's built to last in this new world. So you have two of the biggest players in tech and finance pointing at the very same thing: your own data is everything.
So, that naturally leads to the big question, right? It's one thing to talk about this stuff in theory, but who's actually out there doing it? Who saw this shift coming and has been quietly building for this new reality all along?
Well, that brings us to D3VC. And this is not a firm that just jumped on the AI bandwagon last year. These guys were basically founded on these principles. They built their entire model for an AI-first world way before it was the cool thing to do. And here's the real difference. Think about it like this. A lot of firms are trying to bolt a jet engine onto an old car. But D3VC, they built the jet from scratch. For them, AI isn't just some feature they added on. It is the process, from the ground up.
Okay, so let's pop the hood and take a look at that competitive advantage they have, their data moat. Because this is really where the whole story starts. It's the foundation for everything else they do. First off, just think about the sheer scale here. They're not looking at a few dozen deals that come across their desk. Nope. They've analyzed over 10,000 investment crowdfunding offerings. That gives them a bird's-eye view of the early-stage market that almost no one else has.
And it's not just about how many companies they look at, it's the depth of the data. This is where it gets kind of wild. For every single one of those 10,000 plus companies, they're tracking over 150 unique data points. We're talking about things like how much money is coming in every day and how many individual investors are writing checks. It's incredibly granular.
And here's the real kicker. They started doing this way back in 2016. That's almost a decade's worth of clean, historical data they've been collecting. They were building this asset long before the rest of the venture world was even whispering about AI. Talk about a head start.
So what's the payoff for all this work? Well, this data gives them a real-time map of what's happening in the startup world. They can spot trends as they're emerging, not months after the fact. And because their data covers the whole market, not just who they know, it helps them find incredible women and minority founders that traditional VC networks just completely miss.
Okay, so you've got this incredible pile of proprietary data. What do you do with it? Well, now we get to look at the engine they built to actually make sense of it all. The process that turns all that raw info into real, actionable investment signals.
And look, this wasn't some weekend project. After collecting data for years, they then spent a year and a half just developing and training their machine learning model. And it's not like they just built it and walked away. The algorithm is a living thing. It's learning and getting smarter with new data every single day.
So what does this actually look like in practice? You can think of it as a three-step funnel. Step 1 is the data moat we talked about, collecting everything. Step 2, the AI does the heavy lifting, sifting through thousands of companies to find the needles in the haystack. And then step 3, and this is so important, it gets handed off to the humans. The AI doesn't make the final call, it supercharges the experts, letting them focus their precious time only on the very best opportunities the machine has found.
And when you put their approach side by side with the old school way of doing things, man, the difference is just night and day. Instead of relying on who you know, you get deal flow from the entire market. Instead of gut feelings, you get AI-powered filtering. You go from a really limited scope to a true market-wide analysis. It's a totally different ballgame.
Of course, having the best tech in the world doesn't mean much without a smart strategy and the right people to run it. So now let's talk about the human element here, the expert team and the core investment idea that guides this whole operation.
I mean, look at this team. It's kind of a dream team for this exact strategy. You have Sherwood Nyes, who literally helped pioneer the whole investment crowdfunding industry. Then you pair him with Sudalai Rajkumar, a quadruple Kaggle grandmaster. In the data science world, that's like being a 4-time Olympic gold medalist. Back them up with serial entrepreneurs and fintech platform experts, and you get this incredible mix of deep knowledge in both investing and AI.
And hey,
You don't have to take my word for it. Listen to this investor, Patrick Manasco. He points to the exact same things: the team's incredible reputation and, you guessed it, that exclusive dataset. It's the whole package that makes it so compelling.
So what's the big idea guiding this team and their tech? Well, it all comes down to a core principle in venture capital called the power law. The simple version is that in any portfolio, a tiny handful of investments are going to be such massive home runs that they'll generate almost all of the returns. The name of the game is finding those huge winners.
So here's how D3VC puts that power law theory into practice. To give themselves the best shot at hitting one of those home runs, they diversify a lot. They plan to invest in around 200 different companies. Their AI is specifically trained to find the companies that are showing all the early signs of being able to raise more money from other VCs down the line. It's a really smart, data-driven way to play the odds.
All right, let's pull it all together and talk about why this model is so important, especially right now. This isn't just a cool story about one firm. It's really a sneak peek at where the entire investment world is going.
And that's the big takeaway. This merger of data science and venture capital isn't some sci-fi prediction for the future. It's already here. It's happening now. And D3VC is just a perfect example of a team that wasn't waiting for the wave to hit. They've been building the surfboard from day one.
Which really leaves us with this final question to think about. In a world where anyone can get their hands on powerful AI tools, the only real, lasting advantage comes from the data that only you have. So the question is, are you building that unique proprietary moat, or are you just using the same tools and maps as everyone else? It's a question that's going to define who wins in the next generation of investing.